Why do you think that Nigeria's insurance companies have to consolidate?
Well, there's two trends happening really, a long-term trend and a short-term trend. Basically, 61 insurers, where in a market where gross written premiums is only 0.75% of GDP, so about $2 billion dollars, is a lot of insurers. And there's constraints at that socio-economic level where fundamentally you've got to change a culture in order to increase retail insurance, and you've got to really segment and go strongly into the corporate market. That's the long-term trend. In the short term, regulation is increasing, and NICOM are definitely improving their regulatory capabilities. We're seeing a move to allow, or actually to enforce, international financial reporting standards and risk-based supervision. And those two factors alone will mean that you'll need a lot more skills in-house in order to deal with that, whether it be from a financial accounting point of view or from an actuarial point of view, or you outsource those skills somewhere, which will increase costs, etc., etc.
Some might argue this thing about having a lot of insurance companies with very little penetration, for that matter, is an African problem. Many other African countries have the same. You have over 50 insurance companies, but penetration remains sometimes even below 2%.
Mm-hmm. Absolutely. It's a problem across Africa, but it's also an opportunity, I guess, for mergers and consolidation. We will see insurance growth grow, definitely. It's about changing the culture, and it's about financial intermediation deepening, but it will happen. It's just in the early days.
The financial complexity involved in consolidation might also present some certain problems. For instance, there's significant adjustments that balance sheets might need to go through in Nigeria.
Yes, I mean, there's a potential for that because once you change from one reporting standard to another reporting standard, once you go from a consolidation where you have your own platforms and change to another platform, or so merge in another platform, then there's often gaps within the system. And in the report we highlight that potentially there's different ways of valuing certain assets which may cause a gap in some of the accounts.
Why is it that you believe premium growth will likely outpace GDP growth over the long term?
It's fundamentals, to be honest, just where insurance premium is at the moment. We see there's a pent-up demand for that product, and we see that GDP growth won't be anywhere near the growth of GWP.
Give us a sense of the size of premiums right now in the industry in Nigeria.
It's about $2 billion, I think, just less. And we think it will probably grow at about 20 to 25% a year over the next 3 to 4 years. If you compare that to GDP growth of around 6 to 8%, you can obviously see the gap.
You put in an interesting comparison in the report about Nigeria's insurance industry vis-a-vis South Africa and Kenya.
Very different insurance sectors all the way through. Nigeria and Kenya more comparable. South Africa, almost chalk and cheese, to be honest. It's a very sophisticated market in South Africa,
right.
High penetration, and the opposite in Nigeria.
Another thing that I picked out, low personal wealth, you say will continue to subdue expansion of the retail insurance market. How so?
Well, fundamentally, if you've got low wealth, you don't save, and you won't use these insurance products to save in the long term.
Is the insurance sector in Nigeria equal to the regulators' ambitions? Which is a question you pose in that same report.
The regulatory ambitions are strong for the sector. They want to make sure that there's no big shock. They want to make sure that risk-based supervision comes through. I think there's a number of gaps, specifically in the skill shortages. There is, for example, less than 10 actuaries working in Lagos today,
right.
and there's 60 insurance companies, and that alone shows that there's a skills gap. So I think there'll be a lot of time where there's a lot of change that needs to happen that may cause some turbulence. But I think in the long term, it's right to be ambitious as a regulator.
So sometimes being too over-ambitious in a sense that putting in place certain restrictions that even the local industry cannot match up to.
Some of the insurers will struggle
yes.
to reach those targets, certainly, but that doesn't mean that you shouldn't strive to create very strong regulation. I think it will cause some turbulence, but there's definitely fat in the margins for insurance companies to deal with this.
Because one of the benefits of in consolidation is you narrow the skills gap, which means the larger, stronger insurance companies can then bring in the skilled employees into those organizations to their benefit.
Absolutely, and that's probably one of the trends we'll see. And increasingly, we'll see more skills happen in Lagos. Obviously, it's a very dynamic, very well-educated group of people in Nigeria. They'll probably get some more people to come home to fill that skills gap. But at the moment, that does exist, and it is a risk, and I think the regulation will somewhat deal with that.
How does the industry treat claims in terms of claims payment? Are they up? Is it something which many other insurance companies in other parts of Africa might try and skirt around those?
It's very difficult to create a sector generality, because you've got 10 of the top players which their claims paying ability is pretty good,
Right.
and they pay claims in a timely way. And then you've got right the way at the bottom of the sector where we don't have much transparency at all. So to be honest, it'd be unfair to put a direct quote on those.
Is it likely that, let's say, in a few years' time, we might see just 40 insurance companies in Nigeria?
I wouldn't want to put a number on it, but we will definitely see consolidation in the sector.
What is your long-term outlook on this, finally?
I think long-term outlook for insurance sector in Nigeria, we will get strong premium growth, we will get consolidation. It looks like a good picture, and it looks like there'll be strong ROEs from the sector.